You're tuned in to Agriculture Today, and we start our Friday show with a grain market update from K-State grain economist Dan O'Brien and the senior economist at the IGP Institute, Guy Allen. Dan, Guy, thank you both so much for taking the time to join us today.
Thanks,
Thank you.
Shelby.
Guy, Dan, you guys are currently at the 101st Outlook Forum in Washington, D.C., so we'll have some comments of what you've heard today integrated in today's show. But as we kick off our show, starting with just how we normally do, talking through first corn on the domestic side, Dan.
Yeah, I would say in setting that up, we heard comments from USDA Chief Economist Seth Meyer, so a lot of what we'll be talking about will stem from that. And then Greg Dowd, who is um, the National Milk Producers contact for policy issues, basically spoke to us this morning. And also there was a guy, the fellow from the Kansas City Federal Reserve, I think
Jeff
is,
Schmid. Jeff
yeah,
Schmid from the Kansas City Federal Reserve.
right, talking about financial issues. The first thing that was talked about had to do with uh, the commodity markets, grains especially. That's what we'll focus on. They also talked about livestock, but in the corn market, there was an I guess the USDA announced their expectation that corn area would be 94 million acres this year planted. That's up from 90.6 million, so up 3.4 million. And they gave their estimates then of harvested area that came in with a trend line yield of 181 bushels an acre, up from the ending yield of 2024, which was 179.3. However, remember that they were at 183 or so bushels per acre, 183 plus, I believe, until basically the January report when they dropped at 3.8 bushels. So again, we're projecting 181 bushels an acre. The U.S. has never been over 180 yet. So I think last year at this conference, I believe we were at 183 as a yield projection. So you take those acres and harvested numbers together at 181 bushels an acre, a projection of 15.5, 15.6 billion bushels of supply. We ended up last year at 14.8, 14.9 billion. So quite an increase. Of course, supply's up on all of that. By the time you look at their presumptions about increased feed usage, ethanol holding steady, exports going down a little bit. On balance, you've got a little bit, well, about a 70 million bushel increase in total usage. Stocks at really surprisingly with 15.5 billion 50.6 billion bushels of corn projected. Ending stocks are below 2 billion bushels at 1.965 billion, and stocks to use up to 12.9. And their projection of price was conservative, and really, as all of these price projections were at $4.20. I guess I'd say overall, the USDA came across with the same type of a trend line yield projection and large crop year assumptions, assuming normal weather as they always do. The market saw this today, corn market, and closed down for March 13 and a half cents down to 464 and three quarters, decent 461 and three quarters. And then they went in and talked about international things. Guy, what you remember what they had would you like to comment on what they had talked about on the international side?
Yeah, just look, internationally, exports are expected to be down, as you said, about 50, is it 50 million bushels from
Yeah,
last
down
year?
to 2.4 billion.
And that's predominantly increased production in South America, both Brazil and Argentina, but particularly in Brazil. And look, our exports have been pretty good thus far, but that's been with the absence of China. When that Brazilian crop starts coming off next month, I'm sure that's going to add a bit of pressure on that as we see the logistics switch on that. The Coming back to China, I think it's important to mention, and Seth Meyer mentioned this today, is China's seeing increased production in corn. They came from basically non-existent to being the number one corn importer in 23, 24. Um, And one thing that's driving that increased production is their ability to adapt some improved production practices, particularly with the introduction of the GM corn varieties 2 years ago. And we're starting to see that now having an impact as they are becoming a bit more secure in their corn production, particularly. And that's going to have a flow or effect not only on corn, but also on other commodities there as well. That said, from an international point of view, we are seeing global ending stocks drop down to a historic low. I think it's a 16-year low, and they are fairly tight. We do have some weather situations still persisting, and corn is the one commodity that I guess I'm cautiously optimistic or most bullish on, and I think we're going to see commodities across the board. Corn's going to lead that commodity complex higher. Although we're not seeing that today, we're definitely, I think, have those undertones there in current numbers. I think the other thing that came into the downside on across the commodities today was a bit more clarification on tariffs with Mexico and Canada, as well as China, and how they're going to be implemented. Uh, and also, those comments lent some support to the U.S. dollar, which is a stronger U.S. dollar is always bearish commodity prices on that. And that sort of is precipitating across the commodities as we go, but most strongly felt, I think, in corn.
And as we're
If I
talking,
can, and if I can add in on corn, we were talking China. Sorry there, Shelby, but you remember he said that with regard to China, don't trust the data, and
Yes.
also talked about how an African swine fever hit that they suddenly had them and they switched over to industrial hog production more so, import a bunch of corn. Now they've come in with GMO corn of their own. So Dow did not see a lot of a positive in the long run for corn imports, but he saw an awful lot for meat imports. Comments on
Yes.
that internationally?
Well, yeah. Look at back that we expected that Chinese pork industry to commercialize over the next 15, 20 years. This is from when I worked there 15 years ago. But that event of African swine fever basically made that commercialization of hog production commercialize overnight, and where they banned the production of backyard hogs. Keep in mind, China has over 60%, nearly two-thirds of the world's pigs are in China. So significant shift. And that's when we saw, commercially raised hogs eat imported corn and soybean meal. And that significantly saw a shift. But yeah, China's adaptation to, and with they now planting GMO corn, their yields are going up. Their average corn yield is much the same as North Dakota, Minnesota. It's just over 100 bushels per acre, and it has significant upside. And it doesn't. And keep in mind, China is also the second largest producer of corn in the world. U.S. and China together make two-thirds of the world's production of corn. So that's changing things significant. As far as the meat imports, most of their meat imports have been beef. As opposed to pork and poultry. Strategically, China has decided they're going to import the feed grains and the proteins and produce the livestock in country rather than import the meat itself. The biggest exception to that is beef, and China seems to like beef as well. So that's a good thing for U.S. beef producers.
and as we're talking about commodities, what are we seeing for soybeans, Stan?
There were numbers that came out also with regard to soybean acres at 84 million acres, and that was down. That'd be down from 87.1 million this year, 84 in 2025. So here at corn, corn acres were up up 3.4 million acres. Soybean acres projected to be down 3.1. So somewhat of a trade, not quite even as that all comes about. And also record high prices, record high yields, 52.5 bushels per acre. I think we've struggled to get over 50.7 or 51 in the past. So again, another record high yield that we haven't attained yet, but yet it fits the long-term trend. So that's what they're projecting. 4.37 billion in production. Not a lot. They did show a larger crush. That's consistent with what's happening for soybean oil and other products. And exports up about 40 million because of cheap prices, as we read their analysis. And total usage also up. Ending stocks do show they're projecting a decline down to 320 million. That's down about 65 from this year. Stocks to use closer down to 7.2%. And then season average farm price down at 10. So here you got another situation where the stocks to use down appreciably, but yet being consistent with cash market and futures market prices right now today, they're showing that the price would be about 10 cents lower. Guy, what do you see on the international side there?
Well, in the oilseed complex, we are seeing a global recovery in both sunflower seed, particularly out of the Black Sea area, as well as canola production. And that's going to put quite a bit more sunflower oil and canola oil, rape oil in the marketplace. Um, Indonesia and Brazil are sort of converting their oil supplies into their biofuels program. That's palm oil for Indonesia, soybeans from Brazil, and that's lending this soybean oil price and across the complex firmer. USDA's estimate for season average price for soybeans oil 25, 26. It's 42 cents. It's down a penny, but still fairly strong on that. As you mentioned, U.S. exports are up slightly, up 40 million bushels to about 1.9. Global exports, U.S. is below just 30% of that market share compared to 40% where we were a decade ago. Again, that's competing with Brazil and Argentina. However, our oil exports have remained surprisingly strong. And that's in the wake of increased domestic use for both palm oil and soybean oil in Brazil. So that oil side of things in that complex has been quite optimistic on that. On meal, I guess the one good comment that Seth Meyer made and sort of reinforced by Greg Dowd as well is protein demand, whether it's animal protein or vegetable protein, is expected to remain fairly strong for the foreseeable future. And that makes me a bit more optimistic we're going to be able to clear this surplus of soybean meal into the livestock sector or just into the raw protein complex itself.
We're cutting to a short break now on agriculture today, but when we come back, we'll once again be joined by Guy and Dan as we continue our grain market conversation.